Good afternoon and welcome to NYFP. In midday trade, the major U.S. stock averages have extended its dip into negative territory. Joining me now is Mark Otto of Streicher Co. Good afternoon, Mark. Thanks for joining me.
Thanks for having me back, Remy.
Well, we're here on this Monday, and this could be characterized as the quiet before the storm. We have the Fed kicking off its two-day meeting tomorrow, and we get a slew of economic data from around the globe. So first and foremost, what do you make of today's downside pressure for the equities?
Well, we're seeing some follow-through coming through from Asia. So Japan sold off last night, as did China. Japan probably because of the yen strengthening. China is more because they're now having an audit on their government. So, we've seen China try and reel in their economy, and they're taking several measures to do so. So they're feeling some pain right now. Shanghai Composite last night just cracked 2,000, that psychological level. So we're keeping a close eye on that development.
And Mark, here in the U.S., we're also keeping an eye on psychological levels for the S&P 500 as well as the Dow. We saw record highs last week, but given that we get the Fed, U.S. GDP, and the jobs report, what do you expect to see?
Well, we are in a narrow trading range, 1670 to 1700. We hit 1698 last week. So I anticipate we're going to stay in that range at least until the drum roll on Wednesday, right? So when the Fed announcement comes out, more than likely it's going to be more dovish comments. More than likely it's going to reiterate what was said in June. More than likely it is going to be the fact that the Fed's going to reiterate the fact that they're there waiting. They can be more accommodative depending on macroeconomic data. 50% of analysts polled by Bloomberg would indicate that they anticipate an unwind of QE3 to start in September.
And speaking of September, after this week's Fed meeting, that does mark the next meeting. So we do have a couple weeks before the next Fed meeting. So do you think this week, which is the final week for July and the first week of August, do you think it'll determine trading for the rest of this month?
Quite possibly, because it's not only the Fed that meets on Wednesday. We also have the ECB is going to meet on Thursday. Same thing with the BOE. Non-farm payrolls is going to come out on Friday. So all this is connected to the QE3 unwind in some way, shape, or form. So I think it certainly is a pivotal point. It could definitely dictate the pace. Right now we're towards the end of the summer. A lot of people are away on vacation. One thing to keep in mind is volumes remain low. So it won't take too much to actually spike up volatility again.
And Mark, at the beginning of our interview, you mentioned Japan, and indeed we have been seeing a stronger Japanese currency. And we also saw inflation, according to the latest data, spike to its highest in many years. Over in China, we've been having growth expectations being scaled back by many brokerage firms. So going forward, out of those two countries, what will you be watching?
Well, I think right now Abenomics is basically the forefront for Japan. Recent reports I've read have stated that there won't be another policy meeting until the middle of September. So Japan is more easily swayed at this point, depending on what's going on and any news that might come out. More in China, we're seeing a continued contraction. Some of it is purposely. China is cutting back on excess for manufacturing. Several things that the Chinese government has done recently. They've taken out the lending rate floor, which sounds great, but the fact of the matter is right now there's a credit crunch in China. So if they're not lending at these levels, what's going to make them want to lend and incentivize them to lend at lower levels? So that's sort of, they've got a tight wire to actually go across at this point, because there's several things that are counterproductive to what they're trying to accomplish. So you take, for example, domestic consumption is one of the things that's in focus for China. However, on the flip side of the coin, they're trying to reel in exorbitant government spending, which is a counterbalance to that. So again, if they do a rate cut, how's that going to impact real estate? Because real estate's been, something that they've been really closely monitoring.
Well, Mark, a lot to consider in China, especially since there has been some talk about a possibility of a hard landing. So hopefully that will not happen because it'll have lots of repercussions here in the U.S. So last but not least, before we wrap it up, we've been paying attention to economic data and earnings, as well as any murmurings out from central bank officials. But are there any overall trends that you're paying attention to that are not mentioned in the headline?
No, it's really, if I had to mention something outside the box right now, with the Shanghai Composite diving, one thing we are seeing is interest flow back into China-based U.S.-listed stocks. So over the 1 month period, some of them are making significant gains, particularly the solar sector. There's a stock SOL, it's up over 100% over the past month. So if you've been reading the headlines, some of it is coming out of the solars. There were going to be solar tariffs imposed by the EU that are going to take place on August 6th. So over this past week, regulators from both countries have come to an agreement, and that's not going to happen. So the Chinese solars have been on fire, for lack of a better word, over the past month. Another sector that's really been hot out of China has been the e-commerce sector. So a couple of notable names are Baidu is up like 35% over the past month, and Dangnang's up about 25% over the past month. So there's definitely some interest, particularly in these two sectors.
Well, Mark, thank you for joining me on this Monday, and thank you, as always, for thorough analysis as well as insight.
Thank you.